Hello, dear Doolittle traders. We have completed the tests for Perfect Entry Nexus Signal Generator version 9 and it is now ready to use. In this video, we will not only introduce the new version to you, but also give a full training about how it is used and what features it has. Upgrading to version 9 is completely optional. If you don't want to use the ATR based stop loss defining feature, you don't need to upgrade your software to version 9. In terms of buy and sell signals, there is no difference between version 8 and version 9. Signals that you see on the screen are completely the same. The ATR-based stop loss defining feature, which is introduced with version 9, is aiming to reduce the number of trades that hit your stop loss orders. And also, it will reduce the amount of your losses by optimizing your stop loss levels. Please make your decision about updating your software according to this information. Since this video is designed as a full training video, it will contain every detail including how we install our software on telephone or computer, or how proper settings are made before trading, or how we decide if a buy or sell signal is worth opening a position or not. Let's start with the installation. The Perfect Entry and Exit Signal Generator codes come to you via email as a TXT file. In order to receive the codes, you will need a proper email address. Once you receive them, you will need a PC to install it. But this PC does not need to be yours. You can borrow a PC from anyone for a 3-minute installation process. Then it will be ready to use on mobile phone, tablet, or anything when you have access to internet. Since Perfect Entry Nexus Signal Generator works on Tradingview platform, before the installation process, you need to have a Tradingview account. If you don't have a Tradingview account yet, you can easily type www.tradingview.com on your browser. You can easily sign up here completely for free. Don't worry, it takes only a couple of minutes. TradingView is a trustworthy investment platform. It is provided by Microsoft, so you don't need to worry about if it is reliable or not. Let us show you how a free TradingView account is started so you can see how easy it is. Now let's click the start button here. We are clicking on it. On the screen you can see the pro plans. However, in order to start trading, you don't need the pro plan at the beginning. You can just select the basic membership and just click on it. You can see it here, the basic one, just click on it. When you do that, now you can either choose your Google account or Facebook account. It will start your free membership. It is very easy. Just sign up, Google account, and you are in. Once you log into your account, you should find products link. Under that link, you will see charts. And when you click on it, you will start seeing what we see. Now you should be seeing candle bars on your screen. What we need to do now is to select the coin or stock that we would like to trade. Here on top left corner, you can see that currently we are on Shiba coin chart. If you just click on it, a dialog box will appear on the screen. And here you can type whatever coin or stock that you want to trade. For example, let's try Ethereum. Since we are trading on Binance, we are selecting Binance Ethereum perpetual contracts. We are selecting perpetual graph because we are trading on Binance futures. We are doing that to be able to open both long and short positions, and this way we are making money not only when the market is going up but also when the market is going down. It doesn't have more risk than trading in spot market. We will touch on that very shortly. When you select Ethereum perpetual graph, you will see a chart like this one. But as you can see, there is no buy or sell signal on this chart yet. It is because we have not installed Perfect Entry and Exit Signal Generator yet. Since today we are going to be using Shiba coin for our training, let's switch back to Shiba. By the way, you can use Perfect Entry and Exit Signal Generator on any product such as crypto, gold, silver, forex, stock, and etc. You can also select any currency exchange like USD, Euro. Uh, As I told you, today our training will be on Shiba coin. Let's switch back to Shiba from here. Since its value is so low, its minimum perpetual contract contains minimum 1000 Shiba. Whichever coin you are selecting, you need to select the perpetual version. Don't forget that one. By the way, you don't need to be scared of futures contracts. We are trading with no leverage at all. We only trade with 1x or maximum 2x leverage, which equals the risk level of every trade to standard spot market. The candles on the screen shows us the price movements within the selected time period. For example, we are on 5-minute chart, so every candle represents a 5-minute price movement. But we can come here and change it to 15 minutes or 1 hour or even a day or a week. We are preferring to trade on 5-minute chart. However, you can choose to trade on whichever time period suits your expectations most. This is a very useful chart, but by looking at this chart, it is very hard to determine the next price movement. So in order to make a statistical guess on the next price movement, you need a technical analysis method. This is what perfect entry and exit signal generator does for you. By using price movement, momentum and volume, it analyzes the past price movements and tells you which direction the price will most likely to go. Now let's install our software and see its signals together. In order to install the software, you need to copy the text inside the txt file that we sent to you via email. You just need to copy all of the text. Just like this one. Okay, let's close. Then, then we click on this Pine Editor link as you see on the screen. Pine Editor button. Let's click on it. Scroll it a little bit up. We will paste our copied code to this screen. First delete anything you see on the screen. Then just paste your code here, just like I did. If you are done with copy and paste process, now let's see our signals on the chart. In order to do that, we will click on Add to Graph button here. Here we go. When we hit the save button, it will save the code to your account. It will be saved under your libraries My Script section. And you will be able to open it anytime, anywhere from your account without any expiration date. It will be yours forever. Now installation process is over and the software is yours forever. Whenever you want, you can close it and open it again. If you want to close it, let me do that for you. When you click on this X symbol, it will be closed. And when you come to this indicators, metrics and strategies button, then select My Scripts here. Now you will see your perfect entry and exit signal generator here. You need to find it. Once you click on it, it will appear on the chart again. Okay, just like this one. When you first open your software, you will see a lot of buy and sell signals. Don't be scared by the number of signals here because this is not the screen where we will trade. We have not changed the settings to trading mode yet. In order to see the actual trading signals, we need to open the settings of the software by clicking on the tiny gear icon here. Okay. When you click on the settings, you will see a dialog box like this one. Do not change the first two lines. Keep them as they are. And first thing we need to do is changing buying pressure threshold and selling pressure threshold values. Okay, first let's understand what these values are and what they are used for. In the market, buyers and sellers create a financial pressure on a stock or crypto. This pressure is created by the appetite of the buyers and sellers. It is associated with the number of buyers and sellers and the volume of the positions that they are opening and closing. Whichever group's pressure is higher, the price will be moved to that group's desired direction, that's for sure. And perfect entry and exit signal generator calculates buying and selling pressure values by using price movements and volume. then it gives you a signal when that pressure value exceeds the threshold value that you predefine. So, when you are entering a number on buying and selling pressure threshold boxes, you are telling your software to warn you when buyers or sellers' financial pressure exceeds this value, because you believe when buyers or sellers' pressure increase to that level, the price will be moved to that direction too. Okay, let's type 20 and minus 20 for buying and selling pressure values. And this way, we tell our software to warn us only when the pressure exceeds that value. You are telling the software like something like this: don't warn me when the trend is immature. Wait until the trend is powerful enough for me. Let's check the signals, how they are changing according to our threshold values. For example, type 1 instead of 20. This detail is very important for us. When we set the threshold value to 1, since our threshold is very low, the pressure exceeds that level very easily, and we get our signals at the very beginning of almost every trend. This has downsides as well. For example, if you use a very low threshold value like this, you will need to open and close so many positions in a day, which is not feasible and very tiring. And besides, a trend start does not guarantee that the trend will grow to a profitable level. It may start, but it may end very fast before growing to a profitable level. For this reason, we prefer using 20 and minus 20 for these threshold levels. But this is not a rule. You can choose to use 10 and minus 10 or 30 and minus 30 as threshold values according to your signal expectations. Perfect entry and exit signal generator is very versatile software on this area. If we understood what pressure threshold levels are, now let's continue with our sideway or ranging market filter. This filter can be seen as trend strength threshold and trend strength smoothing values, as you can see on the screen. Sometimes price starts to go sideways and bounce in a very narrow band with tiny oscillations. This is what we call a ranging market. It is very hard and unprofitable to trade in these cases, and this may be a real motivation breaker for all of us. In order to avoid that kind of confusing signals, we created the ranging market filter. It's again completely up to your preference, and there is no rule on this value which dictates how to trade, and you should decide what level of filter you need and trade with that value accordingly. For trend strength threshold, you can pick a value between 0 to 40, and you can choose getting or not getting a signal on ranging market. If the value is 0, then it means there is no filter. You will see every single signal, either it's a trending market or a ranging market. As do Little Trader team, we choose to use values between 12 to 15. Now let's make an example and see how it affects the signals. This area may be a good example for us. Now trend strength threshold is set as 0. If I change it to 25, then it will stop giving the signals that you see on this ranging market. The reason is we told our software to check the last 14 candles, which we define in the settings, as you can see here. By the way, you can change the number of candles to be checked to 15, 20, or anything else. Uh, and now the software is checking the trend strength of that 14 candles. If the strength of the trend is not exceeding my threshold, which is defined as 25, in another way, if the last 14 candles trend is not making a positive or negative angle to the horizontal line as I defined in trend strength threshold, then that means the trend is not as strong as we want it to be, so the software will not show any signal. But if trend exceeds our threshold, and also if buying or selling pressure is strong enough to exceed our pressure thresholds, then the software will show us the signals that we want. Okay, now let's check what happens when you lower your trend strength threshold to 12. As you can see, now it gives signals when the trend is just growing. It is totally up to you to select what kind of trend you want to catch, and then the software is going to respond that way. It will definitely catch all the trends that meets your expectations. It may not guarantee the trend that you caught will continue to grow, but it will definitely increase your profitability significantly. We usually use trend strength threshold between 10 to 15. The signals that you see on the chart are still not ready to open a position. However, we are very close to start trading. Okay. The last setting that we need to touch before we start trading is the ATR feature, which is added to our software with version 9. You can see two setting areas for ATR. First one is ATR multiplier and the second one is ATR length. These settings are defining where the orange lines that you see on the screen will be. We are talking about these two orange lines. Let me show you with my laser. At the top and at the bottom of the candle bar. And these lines, orange lines, are showing us where we should put our stop loss orders. Let's keep ATR multiplier as 2 for now. When we are opening our positions in a second, we will tell you how this setting should be made and what it is used for. If you are following us for a while, you should know that we never ever risk more than 1% of our overall capital. Before version 9 release, on a 5-minute chart, we used always 1% for every position that we open. With version 9, from now on, we will not set a 1% stop for every single position, but we will define our stop loss levels according to these ATR lines. But we must underline that we are not changing our strategy about not risking more than 1% of our capital. This rule will remain the same. What that means is, if our ATR line is telling us that the market is so volatile, then we should place our stop loss order not on 1% but on 2% away from the entry price. Then we will open our position not with all of our capital but with only 50% of our capital. This will limit our maximum loss risk to 1% again. Let's give another example. Sometimes we might want to trade on 1 hour chart instead of 5-minute chart. In that case, the ATR level will definitely be higher than 1%, right? Okay, we are on a 1 hour chart. Let's pick that sell signal here and see what the recommended stop level is. It seems to be around 3.6%. So perfect entry and exit signal generator is recommending us to place the stop to this level. If I want to open a short position here to catch this trend, the software is recommending me to place the stop to this level. If I am opening a position for the signal with a 3.6% stop loss, according to Doolittle trade rules, I should open the position with only 30% of my capital in order to limit my overall loss risk to 1%. This is a rule that we strictly stick to. Now, let's clean up the screen and switch back to 5-minute chart to show you how we are trading. As I mentioned before, this is our risk management strategy. You can choose to use a completely different risk management strategy yourself. We are not claiming that this is the only correct way. This is our way. You may always choose to use perfect entry and exit signal generator with very different settings. You may want to get more signals or you may want to get less signals. At the end of the day, the software is very versatile so that can meet your expectations in any way. For example, let's change the buying or selling pressure thresholds to 35 instead of 20. Let's try that one. As you can see, the sell signal here is gone now. Software is catching only big trends. Like this one here. Okay. Let's measure this one. This this one has around 4% profit in a couple of hours. It is completely up to you to choose your settings according to your expectations. And we are giving only our strategy as an example. Okay, now let's go back to our original settings. As you can see, when we change the settings, new signals appeared between the previous buy and sell signals. And this is how it's going to be. You select your preferences and the software is going to give you the signals accordingly. Now let's remember why we introduced ATR based stops with the version 9. A couple of weeks ago, while we were trading on Shiba, which was by the way selected with your votes on Instagram page, we experienced the importance of ATR based stop loss usage. It was a very volatile week for us, for not for us but for Shiba, which means there were very instant and deep price increase and price drops. Even in that week, we didn't deviate from our 1% stop loss rule and used 1% stop for all of our positions. As a result, in many positions where there were more than 10% profit potential, instant and very high price movements due to very high volatility triggered our stop loss orders, and at the end of the day, we closed most of the very high potential positions with empty hands. Now let's remember 24th of February week. It was a very bitter week for us, by the way, which left bad memories but also taught us a very important lesson. When you check this buy signal, it looks fantastic, right? However, we entered this signal with a 1% stop loss. Please follow the line. As you can see, on this point our stop was triggered right here at the bottom of this red candle and we were kicked out of the position. But right after that, this bloody trend gave an 8% profit. Even if you cannot get all of this profit, the potential was a solid 8% within a couple of hours. It was very frustrating for us. Okay, now let's check what would happen if we placed our stop loss level not on 1% but on the level which our ATR line recommends. ATR was showing us the volatility level and telling us that the price movement within those two orange lines should be considered as normal at the point of that time. In order to predict the trend reversal, price should cross over or under that orange line level. So, stop should be placed out of or at least on the lines. As a summary, it tells us not to put the stop on 1% but somewhere on the orange line. We should start worrying if price drops below this line. But since we placed our stop to 1%, we lost this potential and came back with empty hands. If we had used our ATR based stop level, we would have taken this huge profit potential. Let's check another example which happened during the same day. It is more frustrating, by the way. We entered the position here, we got kicked out with a 1% stop level here, and again, right after our stop was triggered, it gave a fantastic 10% profit within a couple of hours only. Did we get any profit? Unfortunately not. Just like the previous example, if we had placed an ATR based stop loss, we would have taken a very nice profit on this position. We should have placed our stop on this area which is shown with the orange line. The fluctuation which triggered our stop was very normal according to that day's volatility level and it could have been avoided by using the ATR lines which is introduced with version 9. Meanwhile, when the volatility level is very low, ATR based stop is warning us to place the stops not on 1% but on lower risk levels like 0.6 or 0.8%, and this way we are limiting our risk level to a further low condition. We can show you some other examples about this condition too. Okay. On the settings of the software, we showed you a value called ATR multiplier. It was coming with a default number of 2. This setting is asking us how many ATRs should our stop level be away from the position entry level. On the charts lower than 30 minutes, like 15 minutes or 5 minutes or 1 minute charts, we are using that setting between 2 to 3 ATRs. Sometimes even 2 ATRs giving very low levels due to the low volatility. And in order not to hit by stops very frequently, sometimes we set that level to 3 ATRs. But if you are trading on 1 hour, 4 hours or on a daily graph, you may want to use 1.5 ATR level. Let's try it together. Let's write 1.5 here and see how the ATR band gets narrower. Okay, and there we go, we narrowed our stop level. Now let's go back to the 2 ATR level, which we find more useful on a 5-minute chart. But remember that if you go to the higher time frame graphs, you may change it to 1.5 levels. Now, since we are done with all of our settings, we are ready to start opening and closing positions. In the next part of the video, we will show you how Doolittle traders use these signals, which signals get a position and which signals are disregarded for what reason. Let's start with position opening. In order to open a position, we are using two different TradingView screens. The first one will be showing a 5-minute chart and the other one will be showing a 15-minute chart. We are on 5 minute, this is going to be the first one, and the second one is 15 minute. If you don't have time to trade on a 5-minute chart and if you want to open and close less amount of positions during the day, you can choose to trade on a 15-minute chart or a 1-hour chart. For example, let's consider that you want to trade on a 15-minute chart, then your chart which you will get the position signals should be 15 minute and the second page should show you 1-hour chart which is the higher time frame. Since we are trading on a 5-minute chart, our higher time frame is 15 minutes. If you want to trade on a 1-hour chart, then your higher time frame should be 4 hours. As Doolittle Trader team, we are preferring to trade on a 5-minute chart. For that reason, we have a 5-minute graph is open in front of us. We are getting the position signals from 5-minute chart and we are using the 15-minute chart to determine the main trend direction. This technique is called 3D charting on technical analysis world. If you are watching our Let's Test It series on our YouTube channel, by the way, if you have not watched them yet, we strongly recommend that you do. You should already know that defining the main trend line and opening the positions only with the same direction of the main trend line will significantly increase your success rate and net profit. We proved that with our objective backtest results many times in previous videos. This is the reason why we are using higher time frame screens while we are trading with our perfect entry and exit signal generator. We are defining the main trend direction by looking at the higher time frame chart. And we only open positions to the 5-minute signals which are on the same direction of that main trend. If 5-minute signal is not in line with our main trend direction, then we skip that signal and do not open a position. In order to trade like this, we need to use different settings on 5-minute chart and 15-minute chart. Now we will explain the details to you. This is a very important point and should not be missed. On the 5-minute chart, we call it 5-minute chart, but it may be a 1-hour or 4-hour chart for you. Actually, what we mean is the chart which you are getting the position signals. We are using the settings that you can see on the screen. Our buying pressure threshold is 20, selling pressure threshold is minus 20, trend strength threshold is 12, trend strength smoothing is 14, ATR multiplier is 2, and ATR length is 14. Okay. If we were trading on a 15-minute chart, the settings will exactly be the same. This is the setting for the graph that you are getting your position signals. You may choose to use a completely different setting. However, this is what we use on our position signals. When we go to the higher time frame chart, where we will define our main trend direction, in our case it is a 15-minute chart, we will use a different setting. Okay. On higher time frame graph, we are using the software in default settings like you can see on the screen. Our buying pressure threshold is 0.2, selling pressure threshold is minus 0.2. You can use it 1 minus 1 or 2 minus 2, it doesn't make a big difference. Trend strength threshold is 12 and trend strength smoothing is 14. We are asking our software to give us very precise signals to understand the main trend direction. So we are using very low buying and selling pressure levels on higher time frame graphs. We don't want to use any filter. Now let's start opening positions. We are on 5-minute chart. We are waiting for a position signal. Let's say you just opened your screen and saw a signal came a couple of candles back. Do we open a position to this? Nope, we don't recommend. Because this signal may already have given its profit. If you miss the signal by 1 or 2 candles, it may not be an issue, but if you see that a profit had already been made on that signal, then we just recommend you skip that signal and wait for the next one. For example, this sell signal gave an average 1% profit potential. So the profit potential may have finished, so we don't recommend opening a full position for this one. Let's start our replay to check the next signals. It is too fast. Let's slow it a little bit. We are waiting for the signals. Okay, we got a buy signal. We got the signal on March the 7th, 5 past midnight. When we see a new position signals, we immediately go to our higher time frame chart, which is 15-minute chart for the moment. As you can see, we are looking at the last candle which started at midnight. We are still in this candle. There is a buy signal one candle before the last one. So when you open the higher time frame graph, the last signal that you see on the screen is a buy signal. What does that mean? This means our main trend direction is an uptrend. So we can open a long position to our buy signal on 5-minute chart. If there was a sell signal on the 5-minute chart, we were not going to open a position since it is not in line with the main trend direction. Since our main trend direction is uptrend and since we have a buy signal on our 5-minute chart, now we can open a long position. One of the most frequent made mistakes is waiting for 5-minute and 15-minute signals to appear at the same time. Don't make that mistake. We don't need 5-minute and 15-minute signals to come at the same time. 15-minute chart's last signal may have come 10 candles back from now, or it may have come 2 hours ago. It doesn't matter. The only important detail is you should check the last signal on 15-minute chart, which gives you the main trend direction. What we are doing here is we are finding a main trend direction on the higher time frame chart. But we know that every uptrend has its small ups and downs. No trend in the world is going in only one direction. But the small waves on the main trend direction are always stronger than the small waves at the opposite direction. This is very logical. And this is how main trend direction is formed. Once we identify the main trend direction with higher time frame, we are trying to catch lower time frames small waves with the same direction of the main trend. Why? Because statistically our chance of catching them is far more higher than catching the opposite directions. When we get the direction confirmation from 15-minute chart, we call this 5-minute signal as a confirmed signal. We open a position right away and place a stop loss order to our 2 ATR line. Now let's go to 5-minute chart again and open our long position. Our ATR line is at the very bottom of this candle. So we put a stop loss order to this price level, as you can see on the screen. By the way, we drew this line just for you to see and follow the stop loss price during the video. We put the stop order here on the 2 ATR line. Okay, we are expecting the price to go up, but anything can happen in the market and we should protect our capital by using stop loss orders. We opened our position and placed our stop. Now let's follow the candles and see how it will go. Okay, as you can see, our first position hit the stop loss order and we lost some money. This can happen and this will happen. You cannot win every trade. Since we put an ATR based stop loss, our loss is only 0.5% for the time being. It is very good for you to see that this will happen to you too. We are not trying to sugarcoat anything here. If you entered the position at the close of the buy signal candle, then your loss would be around 0.6%. We generally don't wait for the candle close to enter the position, but you might have. Once the signal is stable, we enter the position without waiting for the candle to close. In this position, if you entered the position with a $100 capital, you got your money back as $99.4. Your loss is only 60 cents. This can happen and this happens to almost every day. We need to focus on the next signals. We are waiting for a new signal now. You can either wait in front of the screen for a signal or you can set an alarm. Now we got a new sell signal. What time did we get this sell signal? Let's check. It is 2 a.m. sharp. Now let's go to 15-minute chart and see what the latest signal was on the higher time frame. Let's move the candles to see what the status was at 2 a.m. on our 15-minute chart. We need to move a little bit more to see the 2 a.m. Okay, as you can see at 2 a.m. we got a sell signal on 15-minute chart too. What that means is our main trend direction turned to downtrend at 2 a.m. And this is telling us to open positions to only sell signals on the 5-minute chart. Let's go back to our 5-minute chart. We can say that this sell signal is confirmed by 15-minute chart and we can open a short position here. Now we opened a short position on the current price and placed our stop loss order on the ATR line just like our previous long position. But this time we are expecting the price to go down, so our stop will be placed on the upper orange line. As you can see, our sell signal started to give us a nice profit. This is important. When we see a profit, what we do is to move our stop loss order to our entry price level. We cancel the previous stop order and place another stop order on our entry price. Let us be more clear on this one. Our stop was on the upper ATR line, but we will cancel it and put another stop loss order on the price where we entered the position. I am moving the line on the position entrance price. This is going to be our new stop loss order position. What does that mean and why are we doing that? It means from now on our risk level on this trade is 0. We moved our risk level from around 1% to 0%. No matter what happens from now on, we will not lose any money. In worst case, we will get our initial capital back with no loss at all. Now we see that the market has started to consolidate here. You see a sideways or ranging market. This means we may see a trend reversal here. So we will move our stop loss order a little bit more down, close to the current price. Because if trend reversal happens, we would like to guarantee at least a small amount of profit. I just moved my stop to a price where I guarantee an amount of profit. Now let's see what's going to happen. It is moving down again. By the way, Your stop might have been triggered by one of these needles, but it might not as well. Let's consider that you survived from those needles and you see some extra profit coming. Then you need to move your stop further down to guarantee more profit. This is what we call trailing stop. Let's make a simple calculation. I'm just moving my stop further down. When you place your stop here, the worst thing that you could experience was to close your position with a nice profit. But you still have a potential for more profit. Let's continue moving on the chart. And okay, our stop loss order is triggered and we were kicked out of the position. Let's consider we entered the position from here and we will get around 1.5% profit from this position. Let's wait for another signal. And we got our signal. What time did we get it? It is 4:55 a.m. It is between 4:50 and 4:55. Let's go to 15-minute chart and see if we have a confirmation or not. If it was 4:55 at the moment, you would see a chart like this. Like, let me move it. You would see a chart like this. You wouldn't be able to see the right side of this candle because this candle started at 4:45 and will close at 5 a.m. So when you get your 5-minute chart position signal at 4:55, what is your last signal on your higher time frame? It is a buy signal. What that means is our main trend is still in upward direction, so we should not open a position to our 5-minute sell signal. We are not going to open a position. Then what should we do? We should basically wait for a confirmation signal from 15-minute chart. This is what we should do. Let's check when we will get our confirmation signal on 15-minute chart. As you can see, we will see the confirmation signal between 5:15 to 5:30 a.m. as shown on the chart. So let's continue moving on 5-minute chart. Now it is 5 a.m. It is very likely that we got our confirmation signal somewhere here when this big price drop happened. Then what should we do? We should immediately open a short position because we got our confirmation to our 5 a.m. signal at 5:20. Since we have a higher time frame confirmation, then we can open a short position right away. We will place our stop loss order on the same price level as the upper orange line, just like we explained in our previous positions. Let's consider we entered the position and put our stop. Now we should follow the price. Okay, let's follow the candles. Very good. Now it gave us some profit, so we can move our stop to our entry price and move our risk level to 0. Now we don't have any risk of loss on this position. We only have a profit potential. We are holding a free lottery ticket in our hand. We are following our position. Let's move it. It is consolidating. We don't know which direction it will jump, but we do not have a risk. We saw a buy signal blinking, but it doesn't matter. It was just a blink and it is not considered as a position signal. Okay, we are following the candles. The price is going so close to our stop level and it is making us nervous. But our analysis was right and our position started to give some profit. So it is time to guarantee some profit. We are moving our stop further down to guarantee some profit. As you can see, I moved our stop down and guaranteed an amount of profit no matter what. Let's continue. Wow, I saw a very nice down movement with a needle, so I can move my stop to further down and increase my guaranteed profit amount. Okay, and after that stop loss move, our stop loss order got triggered. Let's check our profit. Let's consider that we entered the position in the middle of the candle, so we can see that our profit is around 1.8%. After you take profit, the position may give another 10% more. You should never ever be upset or angry about it. This is not a game, this is a business. Your target was to make a profit and you achieved your target. You are a very successful trader. 1.8% is a fantastic profit that we made in only a couple of hours time. If you deposit your $100 to your bank account, you will probably get only 2% interest for that amount in 6 months time. But here you made the same profit only in hours. This should be considered as a fantastic profit. Okay, if how we trade is understood, let's don't spend more time on position opening and closing details. Instead, we can fast forward the chart so that we can see what kind of positions a Doolittle trader will see within the day. Let's start. Here we got a buy signal. We should check if it is confirmed or not. If it is confirmed, we open a position with our ATR stop level. Stop may be triggered, but as you can see, our risk level is very low. Our stop is triggered on this one. Now we got a sell signal, but it doesn't seem to be giving a profit. Okay, now we got a buy signal here. Let's check what's going to happen. Very good. Previous two stops might have been triggered, but this last buy signal seemed to be compensating our previous losses and will give us a profit. Let's check the details of the last buy signal. Okay, we got the signal at 14:25 p.m. Let's check if we have a confirmation or not. It will definitely have a confirmation, but we need to understand what time we got the confirmation so that we can calculate our potential profit accordingly. Let's fast forward to 14:25. We are waiting to get to 14:25. We are very close. And here, oh, no, let's continue. Okay, I think we are here on 7th of March at 14:25. As you can see, we got our confirmation with our 14:15 p.m. candle. So it means our 5-minute signal was a confirmed one and we could open a long position to that signal. We would place the stop here right on the bottom orange line level, then we would have moved our stop further up when we got a profit increase. This is the usual process for us. Trailing stop technique. Let's continue fast forwarding the chart. Very nice, very nice. This candle gave us a very nice profit. Let's move our stop to further up. Okay, and with our last movement, our stop is triggered and we got kicked out of the position. No worries, we got a very nice profit from this position. Let's measure it. We would very likely get around 2.8% profit from this position. It might have been a little bit low or high. We are just giving you an average number here. We know that this is not an easy process, but we can assure you that there is no easy way to make money, especially in the trading world. If anyone is claiming or offering an easier way to make money, we recommend you suspect and question that offer in detail. This is what perfect entry and exit signal generator, and this is how we are using it. We follow our position signals on position charts. We get a trend direction confirmation from higher time frame charts. If we have the confirmation, then we open the position We definitely use stop loss orders in every single position that we open. Then we maximize our profit by using trailing stop technique. Please don't forget that a trader's number one priority should not be making money. It should be protecting his or her capital. When you learn how to protect your capital, then profit will follow you with no doubt. But if we cannot protect our capital, then we don't have a business anymore. If you lose 50% of your capital in a position since you didn't use a stop loss, just to earn your capital back, just to make a break even, you have to have a 100% profitable position. You entered to position with $100 and you should exit the position with $200. If you have come to this far in this video, you already know that we spent almost a day to make a total 3 to 4% profit within the day. Yes, we made 6% profit, but we had our stop losses too. So the overall profit of the day was not more than 3 to 4%. A day of work and 3-4% profit. If you lose half of your capital, just imagine how much time you will need to compensate your loss. You need a 100% profitable trade. Try to remember when was the last time you made 100% profit from a trade. You will not have so many examples, neither do we. You are not alone. That kind of money can only be made with high leverage trades with no risk management strategy. We are sorry to say that, but for us, it is not trading, it is gambling. As a summary, for us, limiting the maximum loss in a trade is a must, it is not an option. Okay, dear Doolittle traders, we are through with our training video. Hope you find it useful. This is what perfect entry and exit signal generator, and this is how we are using it. We have come to our very long videos and we tried to give you a flavor of how a Doolittle trader manually trade within a day. We hope that this video helps you increase your profitability or at least save you from making some mistakes. See you on the next Doolittle Trader video. Take care. Bye bye.